Hey guys, Kurt here. Today I want to do something a little bit different. I'm not going to go over a specific trade that I took because I wound up not taking it on Friday. However, I do know that both Thor and Eamon were in this trade and they wound up catching a really good move. But what I want to go over today is how to develop a trading plan and then how to properly execute it throughout the trading day. So, when you are a day trader, whether you are a longer term trader or a trader that focuses on ORBs, a trader that focuses on scalping, it doesn't really matter what type of trader you are. But what's very, very important is that when you are coming into the morning or when you are looking to take a trade, you need to have a trading plan in place. And the reason why is that you need to know before you're getting into the trade, what is your stop? What is your potential targets for taking profit? What are potential targets for adding to your trade so you can extend your winner? What are potential things that you could be seeing during this trade that may help you decide whether or not you want to, maybe lighten up your position a little bit or maybe get out entirely. So today we are going to talk about the FL trade that was taken by, like I said, a couple of different moderators in our chat room and also taken by quite a few members, and show you guys and break down how they came across this trade, how they executed this trade, and other things that they could have done to make it an even better trade. So that being said, let's go ahead and take a look. So the very first thing that you want to do when you are developing your trading plan is you want to figure out which stocks are you going to play that day. So how do you go about doing that? Well, we have our pre-market show that we do every single morning, Monday through Friday. And what we do is we use our Trade Ideas scanner to find stocks that are gapping up or down 2% and with volume. Now, in addition to that, it is extremely important that when you are picking stocks that are potentially in play, that you can also find catalysts that justify the move that it is making. Very often, stocks will gap up or down with the market, and you really don't want to be trading those stocks unless there's some sort of significant news that aligns with those stocks. So, for example, we've seen tariffs in play lately, which means that stocks like AMD or MU, the semiconductors, they're heavily influenced by the tariff news because that's going to have an impact on their bottom line. So that being said, the stock that we're going to go over today is FL. And I unfortunately did not take this trade, but there were quite a few members within the BBT community who did. But what we're going to do is we're going to go through the list and figure out how to figure out which direction you think that the stock is going to go, how to find support and resistance levels that could be either places to avoid or places for taking profit, and then also how to manage your trade once you're in the trade. But like I said, first thing you have to do is you have to figure out, is there a catalyst that is driving the price? And so what I did, and I did review Foot Locker on Friday. Unfortunately, I did not take a trade on it because I was trading CRM. But anyway, so the first thing we see is it did have earnings. And what you see and you can use websites like Seeking Alpha or Finviz, but you see that there was earnings per share, revenue, and then a lot of times what you're also going to be looking for is you're going to be looking for guidance for what they're thinking next quarter. But when you're looking at earnings specifically, you want to see if there are any surprises. So did the stock surpass the EPS estimates? Did it miss them? Did they beat revenue, or did they not generate enough revenue? These are the types of things that can definitely drive the price of a stock. And like I said before, guidance for the next quarter, and more specifically, the year. If they are making adjustments to their end of year guidance, that can have a huge impact on what happens to the stock. You can have a stock that's been trending beautifully, and then they come out and say that they're lowering their guidance. You get a huge move to the downside. So those are things to keep in mind. Now, when you are looking at your stock in the pre-market, and what we're going to do is I'm going to back it up so that we don't see Friday's day, okay? Now, Foot Locker, when it first opened or when it first pinged on my scanner, it was at 37.16. So we're going to use that price point when we're looking for these levels that we're going to be finding. So you can see there's one that's very, very clear right at 36.86. This is a previous level that when it was coming down, it bounced off of and then popped higher. Now, if you don't see anything on your chart within the last month or so, that doesn't mean give up. That doesn't mean stop looking. You need to continue to find significant levels. Just because they're from 2, 3, 4, 5 years ago does not make them irrelevant. You need to be looking to the left and you need to find levels that can have an impact on the stock. So sometimes that means you need to back way out, and that's okay. That's what we're going to do. So now we see that we were looking for levels that were near 37.16, which is right here. Now what I'm going to be doing is I'm going to be looking for levels that have acted as support and resistance in the past, or that there's been significant volume at that level. That is also important. So besides this level here that I already marked, and you can see how that level from just a few days ago also lined up with this level back from 2017. So other levels that I have is I have a level right in here. You can see that this had come up, tested, bounced off, came down, tested, bounced up. And you can also see that once it broke through this level, it did act as resistance over multiple days. In addition to that, I can see this level right here. So we have a hammer, a bit of a hammer. It's not a very clean hammer, but we have a candle where it wicked down to this level. And also on these days, it rejected it. And my next level and final level that I'm going to mark is going to be this level here, right at around 33.25-ish. So that lines up with where it bounced off of here, and also when it came back up and bounced before continuing lower. So the point of marking all these levels is so that you can find places that you can potentially take profit. These levels aren't just random lines that you're drawing on your chart. These are target levels for your trade. Something else that you also need to do is you need to take a look at the pre-market activity. And we're going to use the 15-minute chart for this. But you can see here that look at this 36.86 level that we previously marked, that we saw back in 2017, that we saw a few days ago. This level was definitely acting as support. Another level that we can throw out is this pre-market low here right at around 36. So these are all going to be levels that I'm either looking to see if they're going to act as support or I'm going to use them for profit targets. So let's take a look and see how this played out. You can see that when FL first opened, it came up after testing this level, and then it came back down and it came up. Clearly, there's no way that you should be trading in this area right now because FL doesn't have a real direction. You could probably try taking some scalps. Maybe you take it long over 37.30 and try and scalp it up to wherever the high of the day is going to be. But it's definitely a scalping trade and not one of those longer term trades that I personally like to use. So it comes up, comes back down, tests and holds that VWAP for a few minutes, and then rolls over. And lo and behold, look, it comes back to this level that it was holding all through pre-market, even the first few minutes of the market opening. Comes back up, rejects VWAP, comes back down, tests this level again, and puts in a double bottom. You can see this double bottom pretty clear right here. And you can also see how it wound up playing out, because once it made a new 1 minute high, you see that people were getting squeezed. And same with even in this area here, when it failed to make a new low for the day, people were getting squeezed. Now that doesn't necessarily mean that you should be looking for a long position unless that's in your playbook. And the reason why is that FL gapped down on the day. It didn't have very good news. Fundamentals were changing, and looking at the daily chart, you can also see that it had a very bearish daily chart. This was in a downtrend, and this was basically a consolidation pattern that it was in. So that being said, I need to wait for a good entry. And when I am taking these type of trades, there's a couple things that I'm going to be looking for. So I know that we've seen this support level before. We've seen it back in 2017. We've seen it a few days ago. We've seen it in the pre-market. Now we've seen it in the open. So there's a couple of different entries that you can try and take. You can take the breakdown as it loses this level. Once you get confirmation that it loses this level. Well, what is confirmation? It's not just when it necessarily comes beneath it, but it's when it loses that level and then tries to test that level again, fails, and continues lower. That's when you take one of these trades short, or that's when you take this trade, is because you've gotten the confirmation and you're not just going to get stuck in the fight that's been going on. You can see you don't want to be taking it short here because you don't have confirmation yet. You don't want to be taking it short here. You don't have confirmation, no confirmation. None of this is confirmation. Nothing in here shows that you should be taking it short yet. What this shows is that there's a battle and you don't know who's going to currently win, so you don't want to get in, right? When we're trading, we want to go with the flow. We want to make sure that we're on the right side of the trade and whoever wins. We don't want to fight against the tide because we know it's probably not going to work out. So let's continue to see what happens. It double bottoms, squeezes up to VWAP. A little bit of a fight at VWAP here, which you can see. Just a little bit. Nothing too crazy. And then it goes higher. So now in this area is where it becomes very interesting. And why is it interesting? Well, let's take a look on the 5-minute chart so I can kind of show you a little bit. One of the reasons why it's so important to have multiple time frames is that it makes it a lot easier to see what the overall trend of the stock is. So when we're looking at this chart and we've seen that it's gone down, it's gone up, it's come down, it's gone back up, what you kind of lose on the 1-minute chart is where are the highs at? You don't really get to see that as much because as this chart progresses, you don't see those points anymore. So that being said, why did this become interesting at this point? Right here, right in here? It's because it failed to make a new high. So we have our first high at the high of day, obviously, right around 38.15 or so. And now we're starting to get in a second high, but it is a lower high. So with that being said, this is where you can start looking to take a trade at FL. Now, like I said previously, there are 3 different times that I would look to take this trade. The first being a breakdown right in the beginning or possibly even later as it loses that support level. The second would be if it's trying to make a new high but fails. And so you ask yourself, well, how do you get into those trades? How do you know that something isn't working anymore? And what you can see is that we had this move up from VWAP. And you don't just start taking stabs in here or in here or in here because it's starting to go higher. That's the wrong way to play it. What you need to do is you need to wait for it to make its first new relative high, which would be in this candle here. Then you want to see a pullback, and then you want to see the test of this level. Now, if you can read time in sales, and if you can read level 2, you would have seen that at 37.74, we had a seller stepping in. And when they tried to get it over that level again, it failed. So the perfect entry would have been you're watching the tape and you're seeing it come up to this level and failing. And that's when you go short at, 37.70 or something along those lines. Maybe you get it at 68.72. Now, if you don't read the tape or if you don't look at the level 2 as much, you need to wait for some other form of confirmation. So what other confirmation can you get? Well, you can get confirmation as it starts to roll over and lose the moving averages, or you can get confirmation as it makes a new 5-minute low. Obviously, just taking a 1-minute setup, making a new 1-minute low isn't the way to realistically do it. You need to wait for some form of confirmation that the move is going to start rolling over again. So let's say you get in at 37.40, which is just about a break of a new 5-minute low, because you need to get in a little bit early. Well, what you next need to do is you need to realize that VWAP is right here. We saw that there was a previous fight at VWAP, so we know that there's probably going to be another one. So if you do get short here, What's your stop? Well, your stop could be possibly the high of this candle if you want to have a riskier stop. Or if you want to have a little bit of a wider stop, you put it over the top of this consolidation and this topping pattern. Because you know that if it gets over this level, over here, it's likely going to try for high of day again. So you're in at 37.40. You're in and you're hanging out as it's kind of fighting around VWAP, and now it starts to lose VWAP. What do? Are you looking to take partials? Are you looking to add to your position? Or are you looking to do nothing? So here's my recommendation. You have about a 30 cent stop, okay? When you get in right here. So you've got a pretty wide stop. Taking partials as it's losing VWAP is doing your trade an injustice. Remember, we picked these levels on the daily chart because that's where we think that this stock is going to go. Now, if you were to look at the SPY during this time, SPY was rolling over because of the news that was coming out from with the presidential tweets. So that just gives you an extra bonus sign that, hey, I think my short trade is going to work out. So what you do, you get in short at 37.40, and as it loses VWAP, you add a little bit to your position. Now, what do? Obviously, if you're adding to your position, if you didn't take full size, you don't really need to worry about adjusting your stop. But if you are doubling up your position, or maybe you're at 1.5 times your normal position size, you set your stop probably above this candle here. Because if it lost VWAP, the goal of this trade is for it to continue lower and not for it to continue chopping around VWAP. All right, so at this point, I'm going to zoom out here because it's going to make it a little bit easier for you to see. But what we have is a pretty clear move down. So we had where it failed to make a new high, it chopped at VWAP a little bit, and then it comes back down to this level that we were originally talking about. So once again, you have a decision to make. Are you going to partial at this level? Are you going to add as it breaks this level? These are things that you should really think about before you decide to take the trade. When you're taking the trade either up here, or even if you don't get the best entry and you wind up getting it here, you should be thinking, well, what happens when it gets to this previous level? So this is what I would do, is I would be getting short right in here. I would be adding to my position as it gets VWAP, and maybe I take 10 or so, 20% off as it comes to this level, just to make it so that my trade cannot be a loser. Okay, so if it does come all the way back up to break even, I'm getting out. And there's nothing wrong with that. There's nothing wrong with protecting a little bit of your profits to make sure that you have, at worst, a $0 trade. But here's what I would also do, is as it's rolling back through this level and coming down, I'm going to be adding to my position. And the reason why is that I just got confirmation that my trade, the one that I was originally thinking about from when I was watching this trade or watching this stock at $37, is that I think it's going to lose this 36.86 level, and I think it's going to continue lower, and I'm looking for a move to 36, 35, 34.50. So I'm adding to my position right here. Keep rolling back a little bit. And you can see that just like every other stock that we watch every single day, there's going to be waves in the price. It's not going to be a straight line. Well, that's not even a straight line down to your target. It's going to do waves. And it's really important that you don't get stopped out of those waves unless it indicates that there is a clear reversal coming. And that's going to be going against your trade. So what's a clear reversal? Double bottoms on the 15-minute chart. We also have... let's say we get huge spikes in volume where it makes a candle that just shoots up all the way back up to VWAP, things like that. But other than that, it's okay to hold on to your trade. And if you want to take some partials, fine. But what you really should be doing is you should be holding for your profit targets, because we know stocks move in these waves. You're not going to get a straight dump down. So that means that you should be looking to take profit at your level. That's why we do these pre-market reviews, and why we're going through and looking at the stocks, is because first we're finding the stocks that are in play, but then we're finding what trades we're basically looking for and where it could possibly go. So That being said, I'm taking, 20% off at the pre-market low. Okay. At this point, I originally got in at 37.40. My risk was 30 cents. I've got a really good trade, especially because I added as it broke through VWAP and I added as it broke through this level. So I'm taking 20% off here. See how it continues. Comes down to my level at 34.93. Same thing. I'm taking some money off there. Now, this here is pretty normal, okay? We see this type of stuff happen all the time where it can get to a level, but then start to, you start to see a little bit of buying stepping in because people are basically bottom fishing, they're knife catching. 9 out of 10 times, you don't need to worry about that. Just keep holding unless you get some sort of sign that the stock is actually reversing. A double bottom over a 6-minute period on the 1-minute chart at 12 o'clock is not an indication that this is reversing. Same thing here, right? We get it where it kind of bounces off this level a little bit, but it does wind up getting to my 34.50 level, and I'm taking more off there. So once again, I'm in originally at 37.40. I've added at VWAP. I've added at 37.76 or so as it lost this level. I'm finally taking partials at 36, 35, 34.50. So at this point, I probably only have 30 or 40% of my position left. I've already gotten a $3 move with some of my position. Where am I looking to get out the rest of my position? Well, ultimately, in the perfect world, I'm looking for it to go to 33.21 and beyond, which was that last level that I marked. But something that I did notice is that, as you can see, it comes down to this 34.50 level, and then it really starts to move back up. It rejects that 35 level, and then comes back up, and then it rejects it again. Would I have gotten out more of my position up here? I probably would have wound up taking another 20% off just because it had come to a level and started to bounce off of it. And this bounce here is a 50 cents bounce. This isn't a 10 or 20 cent little rinky-dink bounce. So this is probably something you want to be looking at. Let's say I have, 10%, or maybe I get all out of my position. I'm definitely getting out as we start to get confirmation that it's getting over the 20 moving average on the 5-minute chart. Or alternatively, if I see it start to bounce off of the 9 EMA on the 15-minute chart. If this red candle had been a white candle and made a new 15-minute high, I was probably getting out the rest of my position here. Now let's say I did hold 5%, 10% of my position left. A couple things you can do. As a day trader, you get 100% out of your position. This is when you get out, just before market close. Alternatively, if you're a swing trader, you could still be looking for that 33.21. You have a small position left. It's probably not a bad idea to hold a little bit of your position. So it can be difficult initially when you're trying to develop a trading plan, because if you don't really look at daily charts and don't have a good understanding of daily charts and whether they're bullish or they're bearish, and if you don't really have an understanding of some of the fundamentals that we should be looking at, EPS, revenue, things like that, it can be kind of tough. And then you solely have to rely on technicals, what you're seeing in the chart, the intraday chart. But I think it's important that you can combine fundamentals and technicals to a certain extent to give you an edge over some of your fellow traders, where if you have a really good feeling that Foot Locker was going to be a short, look, they're getting impacted by tariffs, they didn't have a good earnings season, they have a bearish daily chart. By having this general understanding of this information before you get into a trade, it can help you develop a strategy, and in turn, it can really give you a much better move than if you are just someone who takes something because it's over VWAP or takes something because it's under VWAP. So that being said, hopefully you guys learned a little bit about my process when it comes to building my trading plan. I've been using this for a long time. We know that I use the daily chart. That's why I have it up on all of my charts all the time, because I want to see What are other traders seeing? What are swing traders seeing? What are investors and people who are purchasing positions for the longer term? What are they seeing? Because I can use all of that information, and I can in turn take what could have been, a dollar move, a 50-cent move, something like that, and you can really turn it into essentially a $4 move. So that being said, if you have any questions, feel free to leave a comment in the comment section below, and I'll get back to you as soon as I can. Take care, guys, and have a good rest of your weekend.